Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata. With me are Anuj and Sonia. Well, the coronavirus is not gone, but the fierce psychosis appears to have ebbed a bit, with the World Health Organization saying that they're confident of China's efforts to contain it. Of course, there are more cases getting discovered and reported, but for the moment, the markets have clearly put a bottom. You can see that in the US indices. More importantly, the way in which Apple sales are reported to have improved despite the problem in China. I mean, it's a big buyer of Apple products, and it was Apple that led the Dow Jones index higher. That's as far as the global markets are concerned. We still have some positive news coming out of results. I liked most of the mid-cap numbers. I mean, Cummins was better than expected, even if it was, bad per se. Tata Coffee was very good. Manappuram was excellent. IFB Industries was very good. Many of them are consumer related. So that was heartwarming, some of those numbers. And of course, there will always be budget hopes that will come back. So my sense is today the bulls can come back with the budget hopes, but I'll have to wait and see.
Okay, well, the SGX Nifty for now is indicating that the start will be in the green. Lata, morning. Anuj, morning. Yesterday, Anuj, as we were discussing, there will be FII selling because there was pressure in the market. And we've seen FIs sell about 1,400 crores in the cash market, 1,358 crores to be precise. Domestic institutions, though, have bought about 700 crores or so. How do you see the terrain today? Does it look like there could be some buying on dips because of what the SGX is suggesting?
Yes, good morning, Sonia. Good morning, Lata. Well, for starters, I'm wearing yellow today because today is Basant Panchami. So, it's an auspicious day. So, let's hope that, it's auspicious for the market. But I think today what will be clearly, visible is the test of the market's texture. If the market's texture has changed to sell on rally, then today the market will tell you that, because the SGX Nifty is indicating that there's going to be a gap up. Now, because there are shorts in the system, does the gap up sustain? If the gap up sustains, then you will see short covering. But remember what happened yesterday. At one point, it looked like the market, almost broke into the green. Yes. And after that, the market had a big decline. And there's this like one large cap a day keeps the bulls away. That's what's happening right now. Every day, somehow index is finding one stock to drag it. 3 days back, it was HDFC. Then it was HDFC Bank. Yesterday, it was Reliance. Yesterday, Reliance dragged the index by about half of the overall Nifty drag. So I hate to use this term, but a lot of people asking, is there some kind of index management which might be happening as well ahead of expiry? But anyway, short point is that this is a market about swings. Yesterday also the market gave you a swing from the low point. If you made 60-70 points, that's good enough on the Nifty. That's what you got to do. Also, the selling in not just cash but index futures and stock futures, second day running that we have seen, is telling you that there's some kind of perhaps nervousness. Yes. But I maintain my basic view that as of now, this is a bull market correction, and especially in the bank Nifty where we've seen so much shorting, that's candidate for short covering. But if the short covering gets sold into, like we saw yesterday, especially with names like IndusInd Bank, Kotak Mahindra Bank, then you got to be a bit careful of what's happening there. On the Nifty, 12,000 is a sacrosanct support. That's where the market bounced back from last time. So that remains the case. But the mid-cap party is still on. Even yesterday, the mid-caps did well. And this month, the mid-cap is up 6.5%. Yeah. Small cap is up 8.5%. Nifty is down, actually. Sorry, it's down 1%, not up 1%. Nifty is down 1%. And the mid-cap and small caps are actually up quite a bit. So I think it's still a market in which you want to focus on mid-caps. And with all these results telling you that, in individual stocks, there can still be outperformance.
I just want to put two things on the table, and Mangalam was the one who pointed that out to me. This is a week of consumer numbers. Today itself, you will have Godrej Consumer, Pidilite, and Jubilant Food. And then you have later on in the week, you have Colgate, you have ITC, I think. and even the other big...
And a lot of even auto companies, right? There are also consumption, Bajaj
exactly.
Auto, Tata Motors, Escorts.
So this week, Dabur, this week we should know whether the consumer is biting or not.
Yeah.
But you know, there's just one more point, and I think you will read out that call, Sonia. Neelkant Mishra pointing out that, you know, last January also the mid-caps did very well, but gave away many of their gains in February. So we have to bide our time, because fourth quarter comes with its own challenges. The government has cut back on spending. This coronavirus has come out of the blue. So a little bit of exports could also get hit for some of the companies which are export oriented and China facing. So let's bide our time. The mid-cap party is on, but it needs to sustain.
So I just have one follow-up question, Anuj. You know, because it is topical, I mean, should we expect a post-budget sell-off? Because is it that this market is just holding up until the budget, waiting to see what comes out? And, you know, the government can't do much given its fiscal constraints. So given weak global cues, do you think that we're headed for a post-budget sell-off?
You know, anecdotally, markets always see post-budget profit taking and sell-off, because pre-budget there's always some kind of build-up which happens. This time, actually, we haven't seen a pre-budget rally. So let us see. You know, there's still 3 days to go for budget. Today, tomorrow, and then of course Friday, because budget is on Saturday. So I think there's still
a lot of time to build up.
I think this question will be best answered on Saturday, when we know at what level we are entering into, going into the budget. And I think I take this point though on the mid caps. The jury is still out on you know, whether indeed you know, this is one swallow doesn't make a summer, right? So it's just 1 month of big outperformance that we have seen. It's just that, you know, I mean, this time it looks slightly more healthy.
Reliable
the
than
kind of
last.
rally that we have seen, and in the kind of stocks that we have seen, junk hasn't, you know, started to fly. It's only large, you know, the junior stocks, good quality mid caps, good quality small caps. So I'm still holding my hope. And you know, let's keep in mind, you know, this rally is in mid caps now is after a 2-year bear market. Last year it was just a 1-year bear market. So now we have put 2 years of bear market.
1 year after an unreasonable bull market.
Exactly.
So
exactly. 2017 was, you know, I think mean reversion has happened over the last 2 years. Mean reversion is a very powerful concept. And I think the market is now ready to move on. I could be wrong, but let the market give us that answer.
And just a word about, you know, after the budget, what could happen. You know, the budget can be, does not have enough resources to pump prime the economy too much.
Yes.
But it can do a lot of kind things for the stock market. I mean, long-term capital gains, dividend distribution tax.
DDT, yeah.
There are things that can fire up the market, but not necessarily the economy. The economy is a giant, an elephant, which will take a long while to turn. But it can keep the markets cheerful. We don't know. It could be a binary event for the markets.
Okay, well, let's see. For now, the SGX Nifty is indicating that the start will be well in the green, up almost about 0.3% actually on the SGX. So there's green across. Let's take a look at what our wise experts have to say as we kickstart trade this morning. Neelkant Mishra of Credit Suisse says even without the coronavirus scare worsening, they expect the market performance to narrow again. The mid-cap index has outperformed the Nifty in January 7 out of the last 8 times, only to give up those gains in February, and 2020 may be similar. Credit Suisse 30 stock portfolio, despite their cautious stance, has outperformed the benchmark by 0.1% and the Nifty by 1.8% since their last update on the 9th of December. They make just one change in their portfolio. They've exited Bharti Airtel and added GAIL to their portfolio.
Okay, Bharti Infratel, they exit. Okay, let's get to money market views. Pramit Brahmabhatt of Veracity says the rupee will trade sideways with a mild negative bias on the back of heavy selling by FIIs. The trading range for spot dollar rupee is seen at 71 to 71.50. But just a word, was the FII selling more because of expiry, Anuj?
Not really. I think what's happened is...
This is genuine selling.
This is genuine selling. And I think Reliance is the culprit here. Yesterday, Reliance had delivery volumes of about 900 crores. I think the stock has now corrected about almost 9% from its highs. And I think the market's coming to terms with the fact that the Aramco deal may not happen. And, you know, if that deal was factored in the price, then the market will have to perhaps deal with that deal not happening. So I think that's the new reality. So that's the stock which is selling. Also, IndusInd Bank, you know, we were discussing this yesterday as well. The way IndusInd Bank in every rally is seeing selling. Look at the chart intraday yesterday. This is an indication of FII selling because, you know, the moment there's some kind of rally, there's some fresh sell-off which happens in the stock.
Okay, so we'll track all of those stocks, but let's get back to the money markets now and tell you what Dhaval Dalal of Edelweiss is saying. His expectations for today. Spreading of the coronavirus has caused a massive risk-off sentiment with a sharp decline in sovereign bond yields. Indian bond yields have also declined by 5 to 10 basis points as market participants took advantage to reposition ahead of the union budget. He expects the 10-year bond yield to trade in a range of 6.55 to 6.65% in the very near term.
Okay, let's talk about the global cues. Here's Mangalam with the world view.
Well, signs of rebound seen in the global markets. If you take a look at the US markets as well, the Dow Jones jumped about 200 point odd, while we saw about 1% and 1.5% kind of gains coming in for the other two indices as well. This as there is some fear being shrugged off as far as the coronavirus is concerned. Apple and Goldman Sachs, these were the stocks which were underperforming over the last few days, led this bounce back. We also got some commentary coming in from Donald Trump on the coronavirus itself. What came as a balm to frayed nerves was the fact that he is in close communication with China. So US trade deal guys indicating that yes, there is good relationship out there. He also said that he will help them with anything that is necessary because their experts are extraordinary. We got some results as well. Weak results coming in from 3M and Pfizer. Harley-Davidson fell 5% on revenues that missed expectations as well. But across the Atlantic, European markets also shrugged off the coronavirus fear. So we saw a bit of a bounce back to the tune of about 1% for all these indices. Asian markets, only Hang Seng is underperforming because remember, it is playing catch up. It was shut for the last 3 days and that's why it's down about 2.5%. The other index is positive and SGX Nifty indicating a 30-point bump up.
All right. Thank you very much. We like that last line a lot. A 0.25% bump up from the SGX Nifty. Okay, and now with that, we swerve our attention back to the budget with only 3 days to go for that big event. Here's some expert opinion, especially from FIIs who have been selling lately, on what they expect. This one comes from Dominic Bukor Ingram. He's the chief portfolio manager at Fiera Capital, a company that has investments about $324 billion, so a large AUM. Here's what he wants from the budget. Dominic says tax stimulus works only in the short term, adds that India should allow easier foreign investment.
The companies that we own in India probably can deliver 15% earnings growth, but the market overall, I think, is going to find it very difficult to do that. Obviously the negatives are the reduction in growth over the last couple of years, partly due to a build-up of debt, partly due to lower investment levels. So overall, with the current blockages, if you like, to investment and the inefficiencies in some parts of the economy, it's going to make it very difficult for Indian GDP growth to go back up to the 7 or 8% that is required for the market as a whole to grow earnings by 15 to 20%. The main ask goes probably beyond simple monetary or fiscal policy. I mean, starting with monetary policy, it's a very difficult lever to use right now with inflation rising. And we've also seen that with recent monetary policy moves, the pass-through mechanism, because of fears about the stability of some of the banking sector, doesn't really work. So monetary stimulus is very hard. Tax stimulus tends to work on a short-term basis. The only real long-term remedy is for government investment and foreign investment to create long-term benefits to the economy. By focusing on changing some of the institutional factors, such as labour law, land law, and changing those factors to create the environment for foreign investors to come in and invest in the economy. Because it is only investment-led growth that will create the environment where the 15 to 20 million new jobs that India requires every year will be created.
Okay, that's the word coming in from Fiera Capital. Let's do one thing. Let's take a quick break on that note. There's so much to discuss in terms of individual stocks. Our entire team will be joining us in just a bit. Stay with us.